I hear you.
Okay, good. So I really want to appreciate this opportunity. To be able to offer value to, I mean, everyone here present. And it's going to be an interactive one. So let's, brace up and ensure that we engage. So it will not just be that I will be the only one talking. So I want it to be more interactive in such a way that we all can communicate and even learn from one another. So, but before we start, I would like to ask, I mean, what are the expectations you have as participants of this training? It's a 2 days training exercise, and yesterday we started, and I'm sure yesterday was powerful. So, and today we are about to start. But before we start, I would like to just know if, if you have any expectations from what you are expecting today. So, do you have anybody that wants to share?
Yes, we
Sorry,
want to
I was
understand
on
more
mute.
about
So you please your
the
name,
TaxPro Max.
and
Okay, my name is Theophilus.
okay.
My expectation is to get more knowledge about TaxPro Max. I work with an NGO, so the knowledge I have about TaxPro Max is limited to just the NGO aspect of it. So I want to get the general knowledge of how I can file the relevant taxes, irrespective of whether it's an NGO or not an NGO organization. That's my expectation. Thank you.
Okay, thank you. Can I have one more person again that wants to share his expectation?
Okay, good evening, everyone. My name is Alabo Kerem, and my expectation for this class is to know how to sort tax payable after recognition of purchases, because all our taxes, our sales taxes are deducted at source, and we still make purchases are expected to pay heavily for purchase tax. So I want to know how to balance the two, whether to go ahead with purchases, file purchases separately, and just the clarity on the both, how it works.
Okay, that's fine. Thank you so much. So right about now, Mr. Taiba, I would like to confirm if, yesterday we handled the theoretical aspects because I just want to go straight to practical so that we can have enough time to,
Yes,
cover.
yes, sir. We're able to cover to a great extent the theoretical part of it. So you may just need to move to the practical aspect of it, sir.
Okay, good. Thank you so much, sir.
All right,
So
thanks.
I'll be sharing my screen. So I would like to start with the VAT aspect, value added tax. So yeah, I'm not going to be defining value added tax. I'm not going to be saying the value added tax rate and all of those things. So I believe we should know them from yesterday's training session. So in order for us to be able to cover a lot of things that we have on our plates today, so let's just go straight into TaxPro Max. So, but before then, let me just run us through what TaxPro Max is all about. TaxPro Max is the platform where we use for filing and remittances of federal government taxes. When I mean federal government taxes, I mean the Federal Inland Revenue Service. So that's the platform we use to file our returns and then to remit any liability arising from what you have filed. So, and then just to, give us a brief, there are 3 levels to tax compliances. So if you own a business, you are a business owner on this call, or you are a tax consultant or a tax accountant and all those things. So there are 3 levels to tax compliance. The first one is what? Registration. once you need to first of all register a business or a company with the tax authority if at all you want to comply with any tax. Because I mean, if you don't register, you cannot have the tax number, the tax education number, the tax ID, and all of those things that you need to have. So the first stage is what? The registration. And then the second stage is the what? Is the filing. So once you've registered, it means that you have your TIN number, you have your login details, you have your, you have all the things you need to be able to like file your returns. So the next stage is for you to file. So today we'll be looking at how to file your VAT, your withholding tax, and your CIT returns. And then the last stage, which is the third stage of what? Tax compliance, is what? Is the remittance. I mean, you cannot just file alone and not remit. So if you file and you don't remit, it's still more like you've not done anything, because the remittance is the most important thing here, because that's the major revenue to the government. So if you don't remit, you are calling for the FIRS guys or the LIRS guys or any state and revenue guys to come for you. And I mean, you don't want them to come for you. So the last stage is what? Remittance stage, whereby once you file, you remit whatever liability that has come up based on what you filed, and you pay online or you take it to the bank, and so those are the 3 stages of what? Tax compliances. So now let's start with value-added tax. I'll be sharing my screen. Please let me know at any point that you cannot see my screen again. Let me know. It's very, very important, because I will not know that you can't see my screen. Okay, so are we together?
Yes, we are.
Okay, good.
Yes.
So now I'll be starting with value-added tax. Although I don't have any actual returns that I want to file in the real sense, but then I will put us through with some of my clients, page whereby we can just learn 1 or 2 things. So I might not be able to like submit the real returns, but just guide us through how we need to go about the processes and everything. So that's what we'll be doing today. So now let's just go into it. Okay, now this is a company, right? And they have a lot of taxes due. But let me start with that. So when you register with the FIRS, it is the first stage. You have your login details, you have a TIN number, and all of those things. So once you have your login details, it means that you can access your TaxPro Max platform, which is where you will be filing your returns and remitting all your tax liabilities. And once you have that login details, that means you have access to this portal you can see on your screen. So on the portal, we have taxes due, we have concluded assessment, we have tax wallet, we have ledger balance, we have additional assessments, we have taxpayer details, and so let me just take them one after the other. So for your taxes due, this is where all your pending returns will appear. So pending returns, returns that you have not filed, or maybe you filed and you've not paid. This is where everything will appear. So for this company now, we will see that they have a lot of pending VAT that has not been filed, pending filing, pending payment, and it's already past due. So these are what you will see. Or these ones now, they've filed already, but pending payments. So it will still be showing under your taxes due. So that's what taxes due is all about there. And it covers for not just VAT alone, it covers for CIT, and yeah, it covers for CIT as well. So the concluded assessment here means that this is where all your returns that you filed, this is where they will appear. So once you file them completely and there's no issue, it will appear here. It's possible that you filed and then you have not paid. It's possible it will still appear here. So that is where your concluded assessment will appear. So all of these assessments here, they've already been filed for. But some might not have been paid for, but it's still showing here. So that's what concluded assessment is all about. Then this tax wallet. So tax wallet is a new initiative that the FIRS recently just added to the TaxPro Max, page, platform. So this wallet is where you can easily to check track of your words. Keep track of your words, of your audit assessment.
Go, the spotlight. Go.
Sorry?
I'm doing something.
Please, can you mute yourself? Please, sorry.
Sorry. Leave.
So on your wallet page, this is where, if, for example, now FIRS, they raise an assessment, maybe from tax audit or from tax review or from, any audit exercise, it will come under your wallet. So it means that if you have any liability arising from tax audit and all of those things, they will come in your wallet page, right? And so this is where you'll be able to keep track of what all your audits, assessments and all of those things. So that's what basically the tax wallet is all about. So it's to help you, know, the balances of whatsoever, because you can pay in installments. If, for example, now you have tax assessment raised for maybe 1 million naira, for example. So if you decide that okay, you don't have this 1 million naira as a business at a go, you want to pay it in installments. So all those instrumental payments records will appear under your tax wallet. So that's for that. And then your ledger balance. So this ledger balance is the summation of all the outstanding that you have. Do you know, the way you are paying your taxes and the way you are filing and you're not paying. So all of those accounts, the debit and credit, is also balancing in your tax programs. So that's what the ledger balance is all about. So it's showing that this company is having an outstanding of what, 182,000, blah, blah, blah. And then additional assessment. So this is where FIRS, if for instance, you filed your VAT returns, you filed 10,000 naira liability as VAT returns. If the FIRS should review your record and they realize that what you filed you've understated what you are supposed to file, right? They can raise another assessment, and this is where it will appear. So it could be CIT, it could be value-added tax, it could be withholding tax, it could be stamp duty, anything. So this is where the additional assessment will appear. Then, of course, taxpayer details has to do with your details of the company. This is where you see the name of the company, the date of commencement, corporation dates, email. This is where you also, there's a very important information that is there that most people don't take cognizance of, which is the tax manager. Yeah, so which is the tax manager. So this is the person in charge of this company. So if, for example, now I have an issue with this company and it's giving me a headache, I can easily call this tax manager because this is the tax officer in charge of this, this company. So I can call the person that, okay, oh, hello, Mr. Ahmed Musa, my name is this and that, I'm the tax consultant to the name of this company. I'm having an issue, stuff like that. So he will be able to profile, if not 100% solution, he will be able to profile, an assistant for me. So this is very, very important. And I see that most people don't really, take note of that. So it's all in your tax payer details. Then group taxes. This is where anything like withholding tax, withheld VAT, stamp duty, pay as you earn, and all of those things. This is where they will.
Last week.
About them.
You want me to some
Please, can we meet ourselves?
Thanks so much. So, can we have you?
Sorry?
Good evening, everybody. My name is Temitope Kalejai. I work with mutual benefit assurance as a finance manager.
Hello. Okay. So this is where withholding tax filing will be done. If you want to file for withheld VAT, it is under your group taxes, it will be done. It is called group taxes because it has to do with a lot of beneficiaries. You're not filing for just one person. It has to do with you may want to file for a list of maybe 1,000 beneficiaries. That's why it's called group taxes, because you have to upload a schedule and all of that. So that's about group taxes. And then your credit report, this is where your credit status will be, whether withholding tax credits, VAT credits, capital allowance credits, loss relief, and everything. This is where you will see them. So it tells you the withholding tax credit that you have to claim. It tells you the VAT credits you have to claim. It tells you the capital allowance that you are yet to utilize, if any. It tells you the loss relief account. More like giving you the summary of the kind of credit that you have for your company. Like for this company now, they have a credit status of what? 882,000 plus. So which means that out of 1.2 million, they've been able to use 338,000 out of it. So they currently have a credit note of what? 882. So if for example now they have a CIT liability that they want to pay for, they can easily use this credit status to offset it. Do you get? So that's about it. Same thing applies to VAT credits and capital allowance and loss relief. I hope I'm making sense. Please, if you can see me, just kindly confirm that.
I can hear you, sir.
Okay, good.
Hello, sir. Hello,
Yeah,
sir.
can you hear me?
Sorry, on the page you just closed, under that credit report.
Yes, sir.
Yeah, there's something under the loss relief.
Yeah.
A figure is showing there in negative.
Yeah.
Please, what does that signify?
So now, what this signifies is that for this company now, right, it means that they've been able to use they've been incurring loss, right? And of course, if you incur loss, you cannot pay any you don't have any tax to pay. So that loss you can relieve it from any profits that you make subsequently. So now, based on this, what you can see here, it means that this company, they've made loss of 225 million plus, right? And that the only one that they've been able to the only relief they've been able to claim so far, right, is the one is a relief of 1.1 I mean, sorry, they've made loss of 226,497, and then they've been able to only claim, relieve it with what 1.3 million. So there's a balance in their loss relief account that if this loss relief have not used the useful life of 4 years, because once the loss is not live within 4 years, then it means you cannot relieve it again. So that means they cannot relieve it again, stuff like that. So that's basically what this loss relief account is all about.
Thank you, sir.
Yeah.
Yes, sir.
Hello, sir.
Yes, sir.
Can you hear me, sir?
Yes, I can hear you.
Are you saying that in their case now, they have a SX?
Yeah, in this company's case now, they've been making loss. And if you have been making loss, no tax, you cannot pay any tax on loss. However, government will give you a relief. Do you understand? Government will give you a relief because you didn't make profit. So that relief means that any profits you make in the subsequent year, you can go back to your previous year to use that profit to relieve that loss.
Okay.
Do you understand?
Yes.
Okay. So you're already doing CIT. You're already doing CIT like that too, because all of these things are questions that should come up from CIT filing and all that. Yeah.
Okay,
Anybody?
good evening.
Somebody was saying good evening.
Yes. Sorry, please. What I want to know is when a company incurred the loss, would it be the loss relief? Would it be for all the company as a whole, or for even the individuals employees that are working in the company?
No, CIT is CIT. The meaning of CIT is company's income tax. So whatever it is you are filing is for the company. This is not personal income tax. And under personal income tax, there's no loss relief because you cannot make loss. They pay you salary, you get your income, and you pay tax on it. So there's nobody. Is there anybody that is making loss from his or her employer? Nobody. So this is for company. This is company's income tax. So whatever loss a company makes, there's a relief. I think the relief is up to 4 years. So if within 4 years you're unable to like relieve that loss, that means you cannot relieve it again.
Thank you.
Do you understand that?
Yes, thank you.
So I think we still have time for questions so that we can be very fast. So let me just continue with what we're doing. So where did I stop? I think group taxes. Okay, no, credit report. Yeah. So then this one is for TCC. So this is for TCC. But however, ever since I've been a tax consultant, let me put it that way, I've not really done anything on this process TCC before because there is a separate portal for TCC. I think I could recall, was it early this year or last year when the FIRS released a 1 minute TCC generation process. That is, within 1 minute, you can get your TCC provided that you have been able to like file your returns, you don't have any outstanding, you don't have any pending assessment on your portal. So I've not really been able to do anything on this process TCC. But ideally, it should be for you to be able to like process your TCC. So what I expect this to do is to maybe redirect you to the e-service portal because that is the portal where you get your TCC for your company. So that's that about that. Then for asset management, this asset management is for let's say if you made there's a disposal in your company, there's a disposal. So your asset balance ledger will come here just to reflect the what's it called? The net value of the asset that you have, the one that you have disposed and everything. So this is just basically giving us a summary of your assets for the company. Then this info board is for when, for example, if FIRS is requesting that you upload something, or is requesting that you, it's requesting that you upload the document to them as soft copy, it will appear here, right? So, or if you have any, if the FIRS is demanding from it, they can say you should upload your bank statements for any period, for any year. So all those information will come under your info board. It just is a way of FIRS passing information to the company and they should act upon that information. And then the last one here is audit and investigation record. So this one too was recently done. You see this audit and investigation records and this tax wallet was recently added to the TaxPro Max. It was not there about, let's say, 2 months ago. I think this initiative came up 2 months ago or so, or let me say last month. So it was not there. Sorry? Are you saying something? I can't get that.
Let's proceed, sir.
Okay. So this audit and investigation record would tell us the record of all the audits that the company has done so far. Like this company now, I know that they have an audit ongoing for 2020 and 2021. So that is what you can see on their audit and investigation case. So that's basically what your dashboard is all about. So for everybody on this call, so you cannot tell me that, you now know what TaxPro Max dashboard is all about. From this training, you should be able to like say what is taxes due, what is tax oil, what is credit report, and So that's about that. So now let's go to VAT filing. So like I said before, that I'm not submitting any returns because I don't actually have any returns to file, but I'll run us through the process one after the other and ensure that we are cool. So now let's look at this VAT returns. So if you want to file, you click on process. And mind you, if you have not filed returns of January, you cannot file for February. I don't know if you understand. You have to do the one of the, like, you have to start from the earliest to the latest. So if you have not filed for January, you cannot file for February. If you have not filed for February, you cannot file for March. So that's how VAT works. Same thing applies to CIT. If you have not filed the CIT returns of 2020 year of assessment, of course, you cannot file for 2021. The system will not even allow you to proceed. So that's that about that. So now, assume I want to file new returns, which is the simplest. I feel like an intern should be able to like file new VAT returns. So that one is just, if for example your company has not met the threshold of 25 million naira annual turnover, right? So you are supposed to file 0 returns, and that is what I want to do now. So you click on your sales schedule. Now under this sales schedule, you're supposed to like upload a document, because there's a template you're supposed to like follow to upload a document, right? But now, because you are filing 0 returns, you don't need to upload any documents because you don't have anything. You don't have any revenue, or maybe if at all you had revenue and it's not up to 25 billion naira, so you are exempted from VAT, right? So you're only supposed to like file 0. So now all I need to do is just click on my currency, right? Click on proceed, because I'm filing new returns. So then the next what's it called? The next line that you would see is your purchase record. So the meaning of purchase record is that I think it was also this year that the FIRS expatiates more on input VAT. So input VAT is a VAT on purchases. That is, if for example now you purchase an item from your supplier or your vendor, right? And you paid VAT on that purchases made, that VAT you paid is called input VAT. So it is expected of that your vendor to remit that amount on your behalf. So provided that that vendor did that on your behalf, including your TIN number, your name, the amount, the date, and everything, it will appear on your purchase records. It will show that ABC Limited remitted so amount on your behalf. So that amount is what you can use to offset your output VAT. So output VAT is the VAT that is paid on sales. That is, if you make sales to your customer will pay you for that service or goods, and you add VAT to it. So that VAT they are paying you for that sales made is what? Output VAT. So you can use your input VAT to offset your output VAT. That's the summary of my story since. So now for this company, they don't have any purchase record. So I just click on proceed. And then here you have sales adjustments. So this is for this update was done early this year, if not last year, I can't remember. So what this place is trying to tell us is that, okay, this is where you can adjust your sales. Let's say, for example, now you sold, let's say we are in March now, and then in January you made sales, of course, and then based on those sales you made, you filed your VAT returns, right? Let's now assume that in February, a customer that purchased something, that you made sales to in January, returned that particular goods back to you. Maybe the goods has expired, or maybe something shall happen that the customer is not satisfied with that good, and then return it back to you. And you now have to like pay back that customer. Refund the money back to that customer. Mind you, you have already filed that VAT that customer paid to you already in January. So now, based on the fact that you have returned the money back to the customer, it means that government is owing you VAT for that particular customer that you paid. I don't know if that is clear enough. So if you want to claim that amount back, this is where you can claim it back. This is where the adjust sales can be done. So all you need to do is search. Since you've already filed it before, you can easily search for the item number, item ID, paste the item ID here, search for it. It will bring out that particular customer VAT that you remitted, and you can claim it back. But then you have to provide some supporting documents to be able to like get that claim and all of that. So it can either serve as a credit to you, or the FIRS would send it back to the company's account. Either way. So if you want more explanation to what I've said, you can watch the video on how to adjust sales. So in this case, we are not doing anything here, just proceed. And then we have the VAT form. I could remember my early days of being being an intern and everything. That time it used to be a form. This form that you are seeing here, it used to be a physical form that will be filling at the tax office and everything. But now it's now automated. So now all you need to do is since you are filing 0 returns, you just need to cross-check that everything is 0, because if everything is not 0, that means there's a problem somewhere. So all you need to do is click on declaration and submit. Once you submit, the system has automatically accepted the VAT return that is filed. So that's how to file VAT new returns. Any questions? Is it clear enough?
Please, sir, can you explain this VAT form for us? Thank you.
Sorry, I didn't hear.
Can you hear me, sir? Please, can you explain this VAT form for us? Thank you.
So this VAT form is all those stories you have been filling so far, the sales schedule, the purchase record, the sales adjustment. Let's say we have been imputing something there, automatically it will reflect on your form. So we have the total sales, that is the total sales you made. If you have any goods and services exempted from VAT, it will appear here. If you have any zero-rated goods and services, it will appear here. If you have, I spoke about the sales adjustment earlier on. That sales adjustment, so you would have to deduct it from here. If you have any sales income subject to VAT, it's also like everything will, the form has been automated in such a way that it calculates itself based on based on the information you have provided earlier on. So you really do not have any problem with the form, provided that you've done the previous stages perfectly. So all you just need to confirm on the form is to ensure that everything aligns. What I filled was what is there. The input VAT I want to claim is what is here, and blah. The goods and services I want to exempt from VAT is what is here. Stuff like that. So you just need to cross-check that everything aligns. Do you understand?
Lisa, let me clarify something. You said something about 20. If it's not up to 20 million, you file new. I thought VAT was filed on monthly basis. So if every month, if the company doesn't make up to 20 million, you not file VAT.
So the threshold is annual turnover of 25 million naira. So if you don't meet this annual turnover of 25 million naira, you're supposed to file 0 returns.
That's every month.
I'm coming, so let me just finish what I'm saying. So
Okay,
however, if you have a projection that we are already in January, and as of January, based on our monthly financials, we made revenue of, let's say, 24 million. So that should give you an heads up that it's possible that by the time we get to February, March, we might hit 25 million and above. So that's giving you a heads up that very soon we will need to start charging VAT on our invoices and start filing VAT returns and remitting accordingly to the government, right? So, but if that is not your case, all you need to do is to file 0 returns every month.
Okay, so if I understand you clearly, if I'm not sure of hitting that target, I shouldn't be including VAT on my invoices.
You should not do that. You should not include it on your invoice at all. Because if you are doing it, it means you have to remit it. Normally you're not supposed to do that. You're not supposed to include it on your invoice if you have not met the threshold.
All right, thank you.
Yeah.
Sorry, sir. Please, I don't know if
this is not question time, so that we don't get.
Sorry, sir. Please, you asked. You are the one that said if there's any question. There was something I needed clarification on.
Okay.
Yes, it's on the purchase VAT. Now, if I buy something, somebody's supposed to charge VAT and remit to FRS. What's the implication if that VAT is charged on my purchases and the person does not remit to FIRS? What is the implication, especially when they come for tax audit and they are looking at my bank statement and I purchased something which they are supposed to charge VAT, and they charge VAT and they didn't remit? What will be the implication on my clients? Thank you, sir.
Okay, thank you for that question, sir. So the implication is this. I could remember some months ago I posted on my LinkedIn page that as tax consultants, or let me say as accountants, we now need to start building relationship with our vendors. We need to start building relationship with our suppliers, our customers, because of things like this. Because now the FIRS has given us the responsibility to chase our suppliers. So now that you've made the purchases, you paid VAT, you now need to chase them that, okay, hello, dear sir, based on the purchases made 2 months ago, we would like to, confirm if the VAT element has been remitted on our behalf. Attached is the company's TIN and blah, blah, blah. Kindly provide the evidence of, remittance done or something. So you need to chase them to confirm if they've done it. If they've not done it, you have to keep on chasing them. I feel like this is one of the assignments of whatever tax consultants that you have for your company, or if it's an in-house accountant, they need to chase these vendors to ensure that all of these input VAT are done, are remitted on your behalf, and then you can easily use them to offset your output VAT. So the implication is this: if you don't chase them, you are the one that is losing, because you get to pay more VAT than what you ought to pay. Let's say, for example, now you have input VAT of 200,000 outside, and you have a VAT liability of 300,000. So ideally, you're supposed to use that 200 to offset 300,000, so that you will be filing for you'll be remitting for just 100,000. But if you don't chase them, you will end up paying 300,000. So it is to your own, I don't want to say loss, but you need to chase them, right, so that you can get it.
Okay. Thank you very much. I appreciate it, sir.
Okay. So that's about new VAT returns. So now let me quickly go to I just hope this time will be enough. We just Mr. Taib, I don't know, did we cover withholding VAT, withholding tax yesterday? Maybe
No, we just
John Bernard.
No.
Cover that?
No,
Okay.
we didn't. He didn't. Yes. So
Okay,
we need to do it today.
Okay. Let me just be fast then. So for now, let's say we want to file for you have actual sales that was made, because maybe let's say now your company is above 25 million naira threshold and you made sales. So all you need to do is still the same process, click on sales schedule, but now you will be uploading a schedule, right? You'll be uploading a schedule. So now all you need to do is to download the sample templates by clicking on download sample templates. So most times, if it's something that you're already doing every month, you already have the template on your system, so you don't need to keep on downloading sample template every month. So let me click on it. Let me open the Excel document. Can you still see my Excel file?
No, we can't see it.
No, we can't see it.
We're still seeing the TaxPro Max platform.
Oh, okay. Sorry. What about now?
Yes, we can see.
Okay, good. So this is the sales schedule, right? Which it has beneficiary name, it has the beneficiary's team, item cost, item description, and VAT status. So now for your beneficiary name, those are names of your customers, their TIN number, and then whatever item it is that you sold, you put them here, and then your what's it called? The cost of the item. Mind you, this cost you are putting here is the what? Is the contract amount. That is the contract amount on the invoice, which is what? Before tax. Do you understand? So this is the contract amount that is not including any VAT element in it. So this is what you put here. And then the item description, also put it here. So now this VAT status, 0 represents VATable, 1 represents 0 rated, and 2 represents VAT exempt. So if for example, now you have income that is exempted from VAT that you want to file, so you have to declare that income here, and then your VAT status will be what? Will be 2. If you put 0 as your VAT status, the system will automatically calculate VAT on it. So if you're filing for exempt income, your VAT status will be what? Will be 2. If you are filing for 0 rated items, your VAT status will be 1. And then if you are filing for VATable items, your VAT status will be what? Will be 0. So that's that about the schedule. So now let's assume that, okay, we've populated our schedule. Then I'll choose the file and upload, right? Let's see if I can do that. Upload. So now I've uploaded it, but mind you, I will not submit this return because this is just the templates and I cannot submit it just to run us through the sample, the process. So you can see that the first 3, beneficiaries, their item are what? VATable. This one is 0 rated, and this one is what? VAT exempt. Those are the stuff I explained earlier on. So once you've done that, you click on what? Proceed. Oh, sorry, I need to click on my currency. You click on proceed. So we don't have any purchase record for input VAT, so you don't have anything to do. But if you have, of course, utilize it. It is for you. Then you click on proceed. And then if you have any adjustment that you want to make on your sales, this is where you will do that. And then you click on proceed. So now this is the summary of everything. Somebody was asking me that time that I should explain this VAT form. I believe you can see the explanation now. So based on what you have imputed previously, it will come here automatically. So this is just the summary of the 3 things we've done before this page. Do you understand? So we can see that out of the stuff that we filed, this one is actually VATable. This one is what is exempted from VAT. This one is what? 0 rated. So at the end of the day, the actual VAT payable is what? 540. Please, do you understand?
Yes, I do.
Okay, good. So, and then once you are done, you click on declaration and then you submit. But mind you, I'm not submitting.
Those like column and all this like what like this VAT server and VATable, like
I cannot hear you very well. It's not clear.
Okay.
Please, can you explain batch by batch, because this is actually what I'm actually doing for now.
I should explain what?
Okay, like this purchase is not only used in making VATable supplies and domestic purchase brought forward and all those stuff like that.
So actually, you don't actually need all of these details, right? But for this one, let's say I have input VAT that I want to claim that maybe is not appearing under my purchase records, but then the supplier has remitted it on your behalf to the government. You can claim it manually here. That's for this current domestic purchases other than 0 rated and exempted, right? So for this one, this purchase is not only used in making VATable supplies. So if, for example, you have, it's also more like input VAT. If, for example, you make purchases, but not all those purchases are actually something that is VATable, then you can also claim it here back. That's what that one is for. So for this one is purchases made on zero rated items. You can also claim it back here too. And then this one is purchases on purchased imports. This is maybe, let's say, maybe VAT that you pay at the custom duty. At the custom, right? So all those VATs, you can claim them here. These are purchased imports, right? And import purchase not only used in supplies, this one too come here. So this is where we take VAT. Let's say, for example, now you have a vendor that you had transaction with in the course of the month and they withheld your VAT. They withhold your VAT. So you can declare that here as well, right? So that's basically it. I've actually explained it now. So other things that are not editable, you are less concerned with that one because the system will automatically do that for you. Do you understand, sir?
I do. Thank you.
Yeah. So if you can always refer back to the recording if you just need. So that's that.
Sorry, please. What are those exempt from VAT?
So for that one, we have a lot of them. It's something you can actually go online to read on. We have medical services. We have baby products. We have basic food items and all of those things. So these are stuff that are exempted from VAT. Those are goods. We have services that are exempted from VAT. I know of education, even medical services is exempted from VAT. Interest income is exempted from VAT. So, you can always read that online as well, just to add to your knowledge. So that's that about that. So like I said, I'm not submitting. So far, we already know how to file new VAT returns. So far, we already know how to file exempted income returns. So far, we already know how to file zero-rated goods returns. So far, yeah, that's all. So, and those are the key things you need to know about when it comes to VAT returns filing and everything. So let me go back and reset what I've uploaded because it's not for this company. That they're not going to pay liability, that's not for them. So once I reset, it will delete everything. So that's that about VAT. So now let's quickly move to withholding tax. So this withholding tax can be tricky.
Hello?
Yes.
Sorry, I don't know. Is it possible I ask a question around input VAT now, or I should just wait till the end of class?
Okay. Okay, just quickly ask so that we will not have too much of questions. I really don't want to take questions. Just
all right. Sir,
so
please, can we just put down our questions and ask at the end of the class so that we don't have...
Okay. I think, yeah, that's better. Yeah, that's better.
The class is recorded, and of course, you need it later to reference.
Yeah.
So let's not have a lot of questions in between. Thank you, sir.
Thanks. Okay. Thank you, sir. So now we are done with VAT. Now we are moving to, and I believe we all know the deadline for filing and everything of VAT. So those are things you should already know. So yeah, and if you don't know it, try to know it as well. So now let's move to withholding tax. So like I said before, when I was explaining the dashboard of TaxPro Max, I said anything that has to do with withholding tax, withheld VAT, stamp duty, and the likes, they will come under what? Group taxes. So this is where you have your withholding tax, filing, and everything. So I'll click on withholding tax. So, but before I do anything, let me briefly explain this, and I'm sure this would have been explained as well yesterday, but let me just recap. So withholding tax is in two categories. Some are remitted to the Federal Inland Revenue Service, and some are remitted to the State Internal Revenue Service. So for companies, limited liability companies, right, you remit to the Federal Inland Revenue Service. But for business names, individual, partnership business, and the likes, you remit to the to the State Internal Revenue Service. So State Internal Revenue Service is not just LIRS alone. We have for other states, Kwara State Internal Revenue Service, Edo, Bayelsa, Calabar, like that. So you remit to the State Internal Revenue Service. So now we are starting with that of the FIR, which is limited liability company. So if you want to remit, of course, you click on your currency And we have different types of withholding tax. We have withholding tax on contract, on consultancy, on dividend payments, on interest, on, a lot of them, right? So if it is for dividend and interest, there's a separate tick for that one. So you click on it here. But if it is for other things other than dividend and interest, you click on what? Others. This is very, very important. If you go and click on others for withholding tax of dividends, there is a problem somewhere. FIRS will not accept that. They will not believe whatever claim it is that you want to tell them that you made a mistake. They will not accept that. So that's that about that. And then you click the period date you're filing for. You put the period date you're filing for. And then also you have to what? Upload a schedule. You have to upload a schedule as well. So you choose the file. So, but let me download the sample template again so that we can see that. I believe you can see my screen, no? Hello?
Yeah.
Yes,
It's visible.
yes,
You are seeing TaxPro's page, Abby?
Yes.
Okay, good. Just a minute. Now, can you see the withholding tax schedule?
Yes.
Yeah.
Huh?
Yes.
Okay, good. So now, majority used to have issues on this schedule. As simple as this schedule is, it can scatter somebody's head. Because, and as simple as this schedule is, you can only be dealing with it from 9 to 5 in a day if you're having issues with it. And that's the bitter truth. And the trick is very, very simple. So whenever you're trying to populate this schedule, right, ensure that you follow the template. If the template is using slash, don't use dash for your dates. If the template is using day, month, and year, you don't say you want to use year, month, and day. Just follow the template, and then you will not have any issue. Also, for example, if you have, of course, you have list of beneficiaries. So let's now say that some of your beneficiaries, you don't have their TIN. I recommend that you use the TIN verification portal to get the TIN of that company, or you can use the CAC search portal to search for that company's name. Once you search for that company's name on CAC portal, you will get their housing number. With that housing number, you can use that housing number to get the company's TIN on the TIN verification portal, provided that that company is registered with the FIRS. So that's a trick for you on how to get the TIN of any beneficiary that you don't know, you don't have is your TIN. So let's now assume that you don't have any beneficiaries TIN. Instead of making it blank, let's say, for example, now I have ABC. Now let's say, for example, now I have 4 companies: ABC Limited, Adedayo and Co. Dangote. Now let's say I have TIN for ABC Limited 1, 2, 3, 4, 5, 6, 7, 8. This is their TIN number. Let's say for Adedayo and Co, I don't have their TIN. Let's say for Dangote PLC, I have their TIN 2, 3, 4, 5, 5, 6, 5, 4, 5. So let's say I have the TIN for Dangote PLC. But for this Adedayo and Co, I don't have their TIN. So I should not just leave it blank. If I should leave it blank, the system will not accept whatever it is you want to upload. So instead of leaving it blank, I'll just put 0. Do you understand? So this template, the system does not accommodate anything being blank on your schedule. It will reject it. So those are key things you should take note of. And then the dates, transaction date format, follow it the way it is. Another thing I noticed from most people about issues that they face on this schedule upload is that, for example, now you know that February is either 28 days or 29 days in a leap year, right? If you are now saying that your own February is 30th 02 2023, who can tell me the problem that is in this thing, in this date?
Okay, it's not aligned because the first one is actually by the right and this one is by the left. However, February doesn't have that yet.
Okay. So is that, however, Gogo, that I want to hear, because February is not up to what? It's not up to 30 days. So if you are saying your own February is 30 days, the system will help you to reject it. Also, let's say September, for example, now, maybe on your own schedule, you went to put 31st 09 2023. Of course, the system will reject it because September is not up to 30, it's not up to 30, 31 days. It's just 30 days. So this is where this this 30 days of September that we learned from primary school, this is where it's important. So it's applicable in tax too. So yeah, that's about that. So for the transaction description, you also put the services render. For me, I just copy and paste this service render. I fill it for everybody. So some people might want to put other things there, but this is what I do so far. And then the transaction amount. Your transaction amount will be the contract amount. Contract amount, don't forget. So that you're not going to be paying double tax. Contract amount. Then the rate is it could be 5%, 10%, depending on the withholding tax rate that you are doing. Then tax type is always WHT, except if you are doing for withheld VAT, then you can change that to. And that one as well is even WHT as well. So then the tax amount, reference. So for this reference, for me, so far, I put 0 in everything. So I also want to do that. So those are key things you should take note of. If you should do these things perfectly the way I've said it, you will not have any issues. And also, I think I also uploaded an article about this on my LinkedIn page. Let me see if I can share that on the chat box. That will also help you.
Sorry, can you also tell us the various withholding tax rates for the various kind of businesses?
So for that too, you just to save us of time, you can check that online. It's on. Let me show you. Let me quickly show you that. Just a minute. We are almost done. We are almost done. I want to share the link to a post that will guide you on how to upload your WHT schedule. So that link will guide you so much on. So let me share that on the chat box. So that can help you. And then for the withholding tax rates, I'm sharing that as well. Can you still see my screen?
Yes, we can.
Yes, we can.
Okay. So most of the time I like to work with PwC, tax summary, because it's always self-explanatory and easy to understand. So these are withholding tax rates for companies, for individuals. So and we have different types of payment. If it's withholding tax on dividend, interest and rates, 10% for individual and company. For director's fee, of course, it's applicable to individual, that's 10%. Hire of equipment, 10, and so on, like you have it. The lowest that we have is that of what? Construction. That is, if, for example, now you have, maybe you have, what's the name of this company that used to make road in Nigeria? You have Julius Berger as one of your customer or something, or maybe you did a contract with them. So the withholding tax that will be applicable to them based on maybe they constructed road for you or something is 2.5%. And so that's about that. So let me also try and share this in the comments. In the chat box so that everybody can. So that's about that. Now, back to. So once you have been able to successfully populate your schedule, you choose the file from wherever it is, and then you upload it. You understand? So once you upload it, you click on proceed. Once you click on proceed, it will confirm what you have uploaded. It will show that everything aligns, and then you can click on payment to generate your DIN, which is document identification number. So it is that DIN you will take to the bank to make the payment. You can also either choose to pay online as well. So I don't want to upload anything here, because if I should upload this, there's no way I'll be able to delete. If not, I would have done a perfect example for you. But withholding tax is not difficult. The difficult part is the uploading of the schedule. Populating the schedule. So if you have issues populating the schedule, you can reach out to me outside this call, provided that you're a participant of this training. I will always, respond to you. So, or you can also reach out to Mr. Tema too. He will also respond to you. But with all of this guide I've given you so far, you will not have any issues. Once you read that post I sent to you as well, you will not have any issues uploading your withholding tax schedule. So that's for withholding tax filing for the FIRS. Also, another important thing you should note is that ensure that your beneficiary's name aligns with the TIN. Don't go and put the TIN of KPMG for PwC. Don't go and put the TIN of Deloitte for EY. It's more like you're giving another person somebody's credit. Yeah, so it's very, very important that you ensure that your TIN aligns with the beneficiary's name. So that's that for that. So now let me quickly go to the LIRS part for the withholding tax. Apologies. We'll be focusing more on LIRS here, although I know we have other states that are revenue services. Where I know some of us might be from Abuja here. So I know some of us might be from other states. And, so, but we'll be using Lagos State as a case study here. So I feel like it should apply for others as the same way as well. But I wouldn't know if they have a portal like this where you can file. But I think Abuja should have, if some of us are from Abuja. So once you do that, once you click on the e-service portal, the e-tax portal, you log in. So once you log in, you have your dashboard like this. This is LIRS portal. We have left FIRS portal already. So if you want to file your withholding tax returns, you come to payments. Under payments, you see generate/POB. You see payment history, you see make payments. So all you need to do is what? Generate. Click on generate/POB. So now, what this will tell you is that, okay, select agency, select the revenue, and then the currency sign, and then the period for payment. So agency here is your tax station. LIRS call it agency. FIRS call it tax office or tax station. So but yeah, LIRS call it agency. So we have different tax station or agency. So depending on where your own company's tax office is, you click on it. Let's assume we are using Ikoyi tax office. And then you click on the revenue type. What type of withholding tax do you want to file for? So like I said, we have withholding tax on bank interest, on bonus, on building, on commission, on consultancy, blah, blah, blah. So we have them. Let me just click withholding tax on dividend, for example. And then the periods, let's say I'm filing for, we are in November, right? So I'm filing for October. So I'll click on October. The end date is what? October, right? So if it is a one-off payment, you can just click on the check this box for one-off payment. That is, if it is not a recurring payment, you just want to file your withholding tax just like that. There's no a specific period for it. You click on this checkbox for one-off payment. But in this case, we are not filing for one-off, we are filing for October. Then also you populate the schedule, right? So if you don't have the template as well, you have to click on the sample templates and download it here. So let me click on that. So this is how LIRS sample templates looks like. That one is pretty straightforward. It's not as complex. I've not encountered any error on LIRS withholding tax uploading of schedule. I have never. But that one is straightforward. All you just need to populate is taxpayer ID, name of beneficiary, and the amount. So the amount here is not the contract amount, it's the amount of the tax itself. Do you understand? And then, so the only issue I feel like you might have with LIRS withholding tax filing is that ensure that you are saving your file as CSV file. LIRS portal, whether you are filing for annual payee returns, you are filing for anything whatsoever, so far it is LIRS portal, they only accept CSV file. I believe Mr. John Bernard would have emphasized on that yesterday. They only accept what? CSV file. So it's very, very important that you save it as what? CSV file. So yeah, that's that. So once you populate the schedule, you choose the file, you upload it. I mean, for me, personally, I like to give any filing I'm doing remark so that it will be easy for me to like trace back what I've done so far. So if you see the history of what I've filed for this company, you will see that I gave everything remark. September, withholding tax on consultancy, August, everything. I try to give them remarks so I can know that, okay, this is what I've done, you know. So, yeah. Give it remark, and then once you are done, you generate. So once you click on generate, it will generate the bill reference for you that you use to make payment at the bank. You can also choose to like pay online as well. So that's about withholding tax. So now, yeah, we are good to go on VAT and withholding tax. So now, where the major work is now is the CIT filing. Are we together?
Yes, sir.
Okay, I believe I'm making sense as well.
Yes, sir.
Somebody said no?
I said yes, sir.
Okay, good. Thank you. So, now we are proceeding to CIT filing now. So I would like to just quickly do some brief about CIT filing. So CIT filing, I believe, is company's income tax. So you file your company's income tax at the end of the year within a period of what, 6 months. If your accounting year end, for example, is from January to December, 31st December, right? You are expected to file your company's income tax on or before June 30th of the following year. So FIRS gives the grace of what, 6 months for you to be able to like file your returns. And this 6 months will cover the period of saying, okay, our accounts, they are still auditing our accounts, we've not gotten our AFS or monitor, all those delay and all of those things. That 6 months is enough. And most times, if it is not enough, there's always room for you to like seek for extension. So yeah, that's that for that. And then there's also a threshold for CIT. So for companies that their annual turnover is between 0 and 25 million, your CIT rate is at what? 0%. But if your annual turnover is 25 million above, I think let's say maybe 25 million and one, anything above 25 million, up until 100 million, your CIT rate is at what? 20%. Why for companies above 100 million, your CIT rate is at what? 30%. So that is very, very important. So I currently have a client where we filed their CIT returns, and then the TaxPro system is not calculating CIT on it. Meanwhile, this client, their annual turnover is just 23 million or so, which is below the threshold, but the system is calculating VAT and it's calculating CIT on it. So we are still on the back and front letter with FIRS at the moment. So those are key things you should take note of. I mean, know the threshold applicable to your CIT returns, and yeah. So
sorry, so between 25 to 100 million is 25%.
No, not between 25 billion above. Because let me explain it. If your annual turnover is 25 billion on the dot, you are exempted, your CIT rate will still be 0%. So anything above 25 million naira up until 100 million. Do you understand?
Yes, what interest rate is that? And what rate is that rather?
20%.
Okay. Then above 100 is 30%.
Yes, sir.
Thank you.
Yeah. So now, I'm trying to. Okay, let me log out from this company. Let me use another company that I have account to explain. So now, yeah, I can use this company. So I've already filed this company's returns, right? But I have not submitted because the system is calculating. Let me show you. I think I was explaining it the other time. This is the annual turnover of this company, see 22 million plus, which is below 35 million naira. But then the tax format is already calculating CIT on it. Where is it? The tax format is calculating CIT on it. So that's why I did submit it. So you can see why it is important for you to know the threshold, know the relevant tax rate. If, for example, now tax format is calculating minimum tax at maybe one high rate, the current minimum tax rate is 0.5%. Let's say the tax format is now calculating at 10%. You should know that there's a problem. So you need to know all of those things. You need to know your education tax rates, your NITDA, your NATENI, PTF, and everything, so that you should ensure that the system is calculating the real rate for you. Because I mean, this system is not totally perfect like that too, as well. It makes mistake. That's important to try and make it. So now,
But we have done to prevent this from happening in the first place. What should have been done to prevent TaxPro from doing the wrong thing?
I mean, you cannot do anything to TaxPro. TaxPro is a software, so it's like anything that you input there, it can just calculate nonsense for you.
So what can you do to remedy this?
So I mean, for this company now, all we are currently doing is that we've written to the FIRS. In fact, we've written like 3 letters, but they've still not they've not done our request. So now it's possible that we'll write to Abuja as the next step next action that we'll do, or we write to the chairman's office. So that's it. I mean, it's a back and front kind of conversation at the moment. So as you can see, I've already filed the returns because they're already showing mark, but I cannot submit it because of that issue. So now we start from revenue. So revenue has to do with it has to do with the revenue, the annual turnover of that company for that year. So you insert it here and you click on what? Proceed. So now the next page is what? Your your non-current assets, which formerly was known as fixed assets. So this is where, if, for example, in the course of the year, you acquired some assets, you had new assets, new non-current assets, you will put all those additions here. So you click on addition. Now for this company now, I don't think they have any addition. That's why I didn't put anything here. So let's say you have additions, for example, right? I'll do an example for you and then I will delete it back. So all you need to do is to what? Click on the category, the type of asset it is. Is it a tangible asset? Is it an intangible asset? You click on it. Then you select the asset classification or category. So let's say it's motor vehicle. I'll just click on motor vehicle expenditure. Then I'll give it a description as what's motor vehicle. When did I acquire that asset? You put the date of acquisition there. So this is 2019 account. So I'll go to 2019. Let's say I acquired it in January 2019, January 1st, 2019. Then the cost will appear here. Let's say I acquired it for 540,000. And then the rates. So this is where your knowledge of capital allowance will come in. So you need to know all the capital allowance rates applicable to your assets, right? Because you know that in tax, there's no depreciation. I believe you know. So in tax, in lieu of depreciation, it is what? Capital allowance. So what is the capital allowance rate for motor vehicle? So motor vehicle is at the rate of 20 initial allowance rate and 25 annual allowance rate. Do you understand? Or is it no? 25 initial allowance and 20 annual allowance. I think that should be it. But let me confirm.
Yes, it is.
Okay.
And can you share us the share result?
Sorry?
And kindly share the table with us, as in the table that shows the various
Yeah, let me try. I know it's 25-20, but let me try and confirm it again.
Yes, it's 25.
Just a minute, let me show you the link. So this is it. Let me share you the link. So for motor vehicle now, motor vehicle is it's 50-25. Furniture and fittings is 25-20. Okay. Yeah. So motor vehicle is 50-25. Yeah. So I was mistaken it for furniture and fittings. Let me share you the rates. I mean the link. Thank you, Kalajai Blessing. I can see your message. So that's the link to the summary. So the rate that will appear here is what? 25%. If it is 50-25, because I mean it is the annual allowance rate that will be here. Then you click on what? Add record. So once you click on add record, it will reflect as the additional asset that was acquired in the year. Stuff like that. And then if you have depreciation value, you have to impute your depreciation value. So now this depreciation value it will be in your account, in the AFS. So whatever amount it is, you put it here and add it. So let me just assume any figure. add. So it's to show that this company has a depreciation of what? 20,000. So the carrying amount, which is net book value, will now be what? 520,000. Then I will click on what? Proceed. Please, do you understand what I'm doing? Are we getting it?
Yes.
Okay.
Can you repeat again?
Excuse me, sir.
Please, can you repeat? Don't understand what you're doing now.
Okay. So where should I start from again?
Sorry, I have a question.
For question will be after the class. Somebody
You can
saying
start from the beginning, sir. That's
from beginning, from revenue.
From the
No, I can't start from revenue. From where?
From the rate part.
allowance rate.
Oh.
The rates.
Oh. So I'm removing it again, then I'm starting from beginning again. So let's try and focus now. So if you have this addition is where you impute any additional asset that you acquire in the course of the year, right? So all I will do is, what type of asset is it? Is it a tangible asset? Is it an intangible asset? If it is tangible assets, I'll click on tangible. What type of asset is it? Is it motor vehicle? Is it furniture and fittings? Is it anything? So I'm choosing motor vehicle, right? So the description will be what? Still motor vehicle. Date of acquisition. Since this is 2019 account, it will definitely be in 2019. So I'll click 2019, January 1st, 2019. How much did I buy it? I bought it for 540 assumption. What's the rate? Capital allowance rate for motor vehicle is what? 50/25. So I'll put 25 because 25, we are dealing with the annual allowance rates here. Then I'll click on add record. So once I click on add records, the next thing you have to do is what? The depreciation value. You need to add it. So that's why you see it just right beside it. So depreciation value, you click on it. Once you click on the depreciation value, whatever amount the depreciation, you go and check your account. The depreciation value on your account for that particular asset, that's what you put here. So let me just assume 20,000. I'll add it. So once I add it, has already captured it on the system, and automatically it will offset it to get the what? Net book value. So once you are done with that, you click on what? Proceed. So it has recognized it here, right? If I have another asset that was acquired in the course of the year, I can always add more, right? And do it the same way I've done for motor vehicle. So then I will click on what? Proceed. Yes, I don't have more. Now, the next line of action is your depreciation posting. So in some companies, I know of some manufacturing companies that they recognize depreciation in their account under the word cost of sales, while some majority will recognize depreciation under what's operating expenses. So depending on your own company's policy, that is how you share the rates here. So let's say in my company now, in this company now, so let's say, for example, now, like for this company now, their depreciation value is recognized totally in what? Under the operating expenses. So I'll just put 0 and then 100%. So it means that they recognize depreciation 100% in what? Under what? Operating expenses. If the case of your own company is different, maybe they recognize 50% under cost of sales and they recognize the other 50% under operating expenses, all you have to do is what? Say 50, and then you click on what? Proceed. Now, but for this company, no. is 0, 100. Then you click on proceed. So this is where you have current assets. This one is easy. We all know what current asset is all about. So any current asset that you have in your account, just upload them here. Look at their category. If it is trade receivables, if it is prepayment, if it is cash and bank, everything, anyone that you don't have here, you click on others and put the amount, and then you proceed. So proceed. So this is where you have cost of sales. Yeah, cost of sales is, you know what cost of sales is all about. So any cost of sales that is in your account, you also put it here. And mind you, except your cost of sales, most cost of sales will always be finished goods, right? Except you are doing manufacturing accounts, that will be that you have work in progress and all of those things, opening stock of raw materials, but it will always be finished goods. So whatever figure you are putting on your cost of sales will appear under your finished goods, and then you click on add records. So that was what I did here. And then I click on proceed. So this is where operating, other income. This is for other income. So any other income you have in your account, put them here, put the amount, and add it as record, and click on proceed. This thing is very, very simple, right? So this one is for operating expenses. So if you have any operating expenses, most times I don't put anything here because it can be so long. So I just go to the last place where I can populate all my operating expenses. So this is it. So operating expenses. So yeah, all you need to do, if any operating expenses that you have, is it salary and wages, is it depreciation? No, you don't put depreciation because the system automatically puts depreciation there itself. So whatever operating expenses that you have, just put them here, put the amount, and add record. Now for this company, they have administrative expenses, they have finance costs, which is 0, they have pre-operating expenses, which is what, 0. So the way it is on your account, just put them there and add them as record, and you click on proceed. Mind you, in your account, depreciation will be there, right? But you don't need to include that depreciation in whatever you are putting in your operating expenses, because TaxPro Max system will automatically put the depreciation figure itself based on the addition of all the non-current asset that was acquired in the year. Can you record that we inserted depreciation value for that asset that was acquired, that motor vehicle? Can we record that? So that 20,000 naira, it will still have, it will appear. I'll show it to you now. Can you see it? Are we there?
Yes, sir.
So this 20,000 was what I inserted in the addition of the non-current assets that we did earlier on. So it will definitely appear here. So once you are done, click on proceed. So this is for current liabilities. We all know what current liabilities entails: accruals, creditors, and any short-term liability, like it will appear. And then you put them.
Me.
Huh?
Sorry, this one now to me looks like we're preparing our accounts, replicating the account we have on the platform.
Exactly. That's exactly how to find CIT returns. So the only place that will give you headache, or let me say that will give you issues, is capital allowance and the assets, if you have additional assets in the course of the year. So you must ensure that your capital allowance on TaxPro Max aligns with the capital allowance in your computation or in your account, because some accounts comes with tax computation as well.
That means it's necessary for every company to have their own capitalization policy or fixed asset policy and all that.
Yeah, of course. Every company needs to have a fixed assets register that will show the movement of all their fixed assets and you know. I mean, for example, now if I want to prepare any, if I want to file any account, or I want to do any CIT computation, there are some key items I need from the clients. Number one, the AFS, the fixed asset register that will show me the movement of their fixed assets, and maybe other things that maybe their sales deliverables or any other thing that I feel like I might need. Do you understand? So especially that you see that fixed asset register, you need it. So because that one will show you the movement of their fixed assets, to show you if they dispose any assets in the course of the year, if they acquired any asset, the depreciation value, and all of that. You will see them there.
Then that means any company that is operating on a low budget and cannot afford a tax consultant, the sitting accountant that knows how to use this TaxPro must may be able to save them money if they cannot.
Yeah, of course. I mean, yes, that's our work as accountants. So as accountants, you'll be able to have idea of all of these things, so that you can always help us. Yeah. So you populate your current liabilities and put the amount, click on proceed. Same thing applies to long-term liabilities as well. Any long-term liability that is on your account, put them here and the amount. So this is where we have ownership and capital structure. I believe you all know what capital structure is all about, which is the owner's portion of the business, right? So the issued and authorized share capital of the company that is on your account, you put them here as well. So that's what is done here. You have authorized and issued, so you have to put the two. So, and it's local equity, the amount, you put the amount. So you don't need to put anything under your preference share, except if you have preference share in the company, you can put it there too as well. And then you click on proceed. So this is where we have reserve, other reserve like retained earnings, revaluation surplus, general reserve, share premium, and other things that you have as your reserve. Anything, so come here and you put the amount. Then you click on proceed. And then you have profit adjustments. So your profit adjustment has to do with disallowable. So this is very, very important. There's no way you want to do tax computation that you don't know all this. You need to know the allowable items. You need to know the disallowable items. You need to know the taxable income. You need to know the non-taxable income. These are very, very important. And these are stuff.
You share such a table with us, those two tables. Please.
I'm not sure I have the table, but you can always check online. Let me see if I can get that online. But you can get a textbook or something. If we have ICANN people here, you can. It's been ICANN pack as well. Liable expense. But not to just waste our time, so that we don't have much time again. But you can always check online for that. But the most important thing is, provided the way you can know this thing is if that particular expenses or income, it means the rent principle. I believe we know what rent is all about. Only, reasonable, exclusive, and what? Who will tell me the last one?
Necessary.
So if it meets that principle, then it is allowable. If not, it is not allowable. If there's one thing you should know if they should wake you up from your sleep and they should ask that is it an allowable expenses, they don't need to tell you that one. Depreciation is what is disallowable. So that's one of the things you add back to your profit before tax when you're doing your computation. So that is why you can see that profit adjustments add back disallowable expenses. Number one, depreciation. That 20,000 naira that I imputed earlier on, they are adding it back because it is disallowable. Because in tax, we don't want to hear anything depreciation. So yeah. So if I have other things like maybe loss on disposal of fixed assets, unrealized foreign exchange loss, donation, entertainment, all those things. Especially if your donation is not specific, if it is general, it's not allowed in tax. So it has to be specific for you to be able to like count it as allowable expenses and all of the other things like that. So you click on proceed once you do that. And then this is where you have your balancing adjustment. Let's say, for example, now, yes, disposal of assets or all of those things. It will come here. You can add record. Add record. Click on add record. So this is where you any disposal of fixed assets, it will appear. Then you click on proceed. So it will show you your profits or loss status based on what you have been imputing so far. Click on proceed. And then it will now tell you your capital allowance. So for this company now, the current capital allowance is 337,500. The capital allowance can
Ẹ
be
lọ pẹ́ mi sílé yìí sọ fún yín o. Omi tí mo kọ́ ẹ̀kọ́ sọ tí mo ẹ̀ ní ṣe ń tèmi.
So yeah, your capital allowance breakdown will come here, but you must ensure that the capital allowance figure here aligns with what you have in your account or in your computation. Once it aligns, you don't have any issues. Click on proceed. But if it does not align, that is where the back and forth is. You have to know what is happening. You have to know the cause. You have to go back to the roots and look for the cause. So, but if it aligns, you click on proceed. And then you are done. You have your what? CIT form. So this CIT form will give us the breakdown of everything that you have filed or imputed. So now it will be telling you. So once I get my CIT form, the key things I need to take note of is, number one, your gross profit, it must align with what you have in your account. Your profit before tax, it must align with what you have in your account. Your total assets, it must align with what you have in your account. Your net asset, it must align with what you have in your account. Your accessible profit, it must align with what you have in your computation. Your what again? Your capital allowance, yes, it must align with what you have in your computation, and so on and so forth. And your CIT rates, your exposure, it must align with what is in your computation as well. So that's basically it about CIT. I mean, so, but wait, let me go back and delete that asset that because this company, they don't have any assets. So that I will not forget. So let me remove the asset back. Yeah. So, yeah, that's no profit adjustment can be there. I'm trying to, okay. I'm trying to remove all the things I added to this filing, just to, I mean, it's just an explanation I've been doing so far, so that I'm not going to forget. So we are good to go now. So any question so far? I think I am done. I tried my best not to waste too much of time.
Yeah, thank you, sir. Please,
Okay, sir. Please.
The first question is, what is
no, sir, I think let Mr. Teba undo that so that it can be orderly, so that we will not. Yes, sir.
Okay. Thank you so much, Mr. Adeda DBC, for this wonderful session. So I think if you have any question, you can kindly just indicate by raising up your hand. Why, Mr. Adedayo answers the questions. I believe that is okay.
Yes, that's fine.
Okay, so if you have any question, can you kindly we can take 5 short questions. Let it not be what we drag. Then in the group, you can also share your questions. We take time to answer them also. So let's have 5 people ask their question. So you can raise your hand while Mr. Adedayo calls you out to ask your question as he answers. Thank you so much.
We are waiting.
Wow, I can see a lot of hands up.
Sorry, how do I raise up
So
my hand?
let's start with Uchechukwu. Uchechukwu, can you ask your question, please?
Okay, thank you very much, Mr. Adedayo, for this wonderful insight. Okay, however, my question is will come for the VAT. So because previously I've been trying to do especially on the input VAT. Now most times I have for my clients I have our vendors actually remit sometimes, and then we'll have the input VAT. But most times, even if I claim it, it doesn't reflect on the form. So what could possibly be the issue on that? And then secondly, on these secondly on the depreciation on that asset side. Okay, so you said on the rate we should it should be that we should use the capital allowance annual allowance rate, and not the, because I know every company has their own depreciation rate for any particular asset. So and then we shouldn't based on what you did, we shouldn't use the what is it called? We shouldn't use the company's depreciation rate. Rather, we should use the capital allowance annual allowance rate, and then put. So how, like, it's, for me it's conflicting, so I don't know, probably you shed more light. Thank you very much.
Okay, let me start from the last question so that I take it up. So for I said that in tax we don't regard depreciation. So in tax we only recognize capital allowance instead of depreciation. So if you are filing your tax, then you cannot impute depreciation you cannot use depreciation rates in your tax filing. So all you can use is what? This capital allowance rate of that asset. If you should look at the profit adjustment that was done, you will realize that the depreciation value for that year was added back because it is a desirable expenses. So that's to answer that question. And then for the first question, if I'm trying to remember the question. So if you claim inputs VAT and then it's not reflecting, I think that's what you asked. So I don't know why it ought to reflect. Maybe I don't know if you're not doing it the right way, but if you can claim it manually, there's I think line 70 under your VAT form or so is where you can claim your input VAT manually. So it will automatically offset each other once you do that. And mind you, ensure that what you are claiming has already been paid for by your supplier. Don't claim what don't claim what you are not entitled to. Let me put it that way. Thank you. Is that fine, sir?
Yeah, okay, fine. Thank you very much.
Yes.
Okay, thank you very much, Mr. Adedayo, for that wonderful response, and Mr. Uchechukwu for that question. So the second person, please. Let's see, Kalajaye. If I'm correct, hope I didn't murder your name. Can you please ask your question, please?
Yeah, good evening.
Good evening.
I have 3 questions for Mr. Adedayo Adebisi. The first question is on the capital allowance we calculated on the CIT form. We use the capital allowance rate on the platform, which is the 25% for the annual allowance. And it appeared that that was what come up with our depreciation, which we are adding back. So I don't really get that aspect. Is it that the annual allowance we use to calculate the capital allowance is the same size as the depreciation or what? Then secondly, I know in capital allowance you used to have an initial allowance, annual allowance, and investment allowance, and all those allowances. So I'm not really clear. Like, why are we only considering the annual allowance, neglecting others? Like, is that how it is on the platform? I want to get clarification on that. And also, on the VAT status, sir, you were explaining something about if it's 0, if it's 1, if it's 2, what to do. I don't really get that aspect. So I'd like you to please briefly explain that. And lastly, when you were talking about the withholding tax, how to file withholding tax on the TaxPro Mass, you were trying to show us some things. Then later you went to LIRS platform. So I don't know. I want to know, like, is it that the one you did on the LIRS platform, you will take it back to the TaxPro Mass, or there are just 2 different ways to file the withholding tax? Thank you. Those are my questions.
Okay. So let me start from the last one. So FIRS portal is different from LIRS for your withholding tax filing. Like I said when I was, doing the practical session, I said that for FIRS accept withholding tax returns of companies. Limited liability companies. While for individual, like myself and yourself, or business names, or partnership business, they remit their own withholding tax to what? To the State Internal Revenue Service, which is the likes of LIRS, FCTIRS, Kwara State Internal Revenue Service, and Ogun State Internal Revenue Service, and so on, right? So what I did was to show you how to file and remit on FIRS portal and how to file and remit on LIRS portal. So that was why I had to, when I was done with the FIRS portal, I went to the LIRS portal. And I was making a disclaimer that I will be focusing more on LIRS, because I know that we might have other people from another state on the call that maybe they don't relate with LIRS and stuff like that. So, but then it's still the same principle. Just that maybe other states might not have, they might not have their own system automated online. They might not have a website or something. Maybe they still do manual stuff there. So that's what I cannot say. So that's to your last question. So to the second question, you were saying you don't understand the VAT status. So VAT status is, we have 0, we have 1, and 2. So 0 means that your whatever it is you are filing for is VATable. If you should put 1 as your VAT status, it means that that particular goods or services is 0 rated. If you should put 2, it means that that particular goods or services you want to file is VAT exempted. So those are the 3 different VAT statuses that we have and what it signifies. Then for the first question, which is about, I think, capital allowance and depreciation. So capital allowance is different from depreciation. The rates I used for the additional asset that was acquired by the company in the year was the capital allowance rate. I cannot use depreciation rates because you don't recognize that in tax. So I use capital allowance rates. However, the depreciation value that is in the account, I imputed it, I added it to it because that will help me to get the net book value. And the whole idea of me adding the depreciation value is for me, let me see if I can share that screen again. But I've deleted it, I've removed it. But the whole idea is that so that depreciation I'm including, so that the system can automatically add it back. Because this depreciation is disallowable expenses, and in your account you have already recognized it. So we need to input it in your computation or in your filing so that the system can add it back as disallowable expenses. That was why we included depreciation of 20,000 naira in that practical session that I did. And the 25% capital allowance rate we used is for annual allowance, and that is for capital allowance. You were also asking me that why didn't we use initial allowance? So initial allowance has been, like, the way the tax payment system is, the system will automatically calculate that one for you. Mind you, initial allowance is claimable once in the lifetime of an asset. So the way I've imputed that particular asset of 540,000 naira, the system will automatically calculate initial allowance on it, and then it will add it to the 20% annual allowance rate capital allowance I've inserted myself. So that's to answer that part. And then you also saying something about investment allowance. So investment allowance, according to the New Finance Act 2023, it has been deleted. So except if you are filing returns for accounting year end on or before September. Is it September? No. September 2023. So if your accounting year is on or before September 2023, you can still claim investment allowance on any assets that qualify for investment allowance, which is plant and equipment. So, but if not, going forward, investment allowance, according to the Finance Act 2023, it has been deleted. There's nothing like investment allowance again. So,
all right. Thank you very much, sir, for the clarification. Thank you.
Okay, thank you very much for that wonderful answers to that question, Mr. Adedayo. Let's look at the next person. The next person is Mr. Awodumila. So hope I didn't murder your name. Diola. Please ask your question, sir.
No, it's fine. Thanks so much. All right. Thank you very much for the class. It was very, very insightful. So I just have two quick questions, basically. The first is on the the input VAT, actually. So I don't know, because I work with an engineering company. I will notice on the input VAT now, for me, it's more like FIRS is just inconsiderate, because expecting the companies to be chasing suppliers and all that. So we have a customer, or should I say a supplier actually, that has been giving us VAT inclusive invoices over the years. But we noticed that she's not even registered. She doesn't remit. And as you already know, there's no way we can claim input VAT if she does not remit to FIRS. So what we are thinking, there's no point including VAT in those invoices again, since you are not going to remit it. And another part of it is that I'm trying to get like your suggestion on that particular scenario now. Is it okay if we inform her to stop including VAT on those invoices? Or is it a thing of we can't select which party because she supplied granite and some sharp sand at times? So is it okay if we tell her not to include the VAT anymore since she won't remit, or it's not our case to decide which particular material should include VAT or not? So I just want to get your insights on that. And secondly is on late remittances, because in the past we actually paid this LRP because we didn't file for our VAT on time. And then after making the payment, it was taking longer than expected for them to effect it on the TaxPro Max. And as you already know, if they don't clear that off, there's another 25,000 that is coming in the next month. So it took a lot of efforts, before they could actually fix that. So I just want to say, in that kind of scenario, just for future references now, in that kind of scenario whereby the TaxPro Max is malfunctioning, and you, just like the one you painted in one of the scenario in the companies now where it's having issue, and so how do you remedy that, in such a way that I don't know if you get my questions. Just your insight on those two scenarios now.
Okay, so let me start with the last one. So if you have issues like what you just stated now, or maybe if the tax format is calculating the wrong tax rate or something, the only thing you can do is to write letter. I mean, that's the best solution. I mean, I know. Although letter can it takes a lot of back and front for them to be able to like um work on it. But then since you have a written document, that's an evidence for you to back up your claim of okay, we've been writing letter to you for over some months now. This payment that we've made has not been, I mean, affected on the system yet. Stuff like that. And now we're already in a new month. The system has already calculated another LLP. So you can use all those previous letters you've written to them as a backup or as an evidence to let them know that this thing has been paid for since. So it is not a fault that we are incurring another LLP. So you can use that as a basis to fight. So I'm very, very sure if the back and front is eating it very well, they will remove the NLP you're talking about. The new LLP, they will remove it.
Okay.
So for the first question, which is around input VAT. So
Yes.
I don't know. You might not be in that best position to advise the company to stop charging VAT since they will not remit it. So the only
It's more like an individual, just a middleman. She's not the one producing the material now, so she's just maybe buying from the main producer. So we're thinking maybe since it's not like a registered company that is recognized by FIRS. So is it necessary she include, because actually from inception we were actually the one who told her to include the VAT. That was before we started uploading this before the new
schedule?
system now, before yes, exactly. Before it was easy for us to just accumulate our tax credits with all the input VAT that we pay. But now that FIRS doesn't really care about input VAT anymore, they're just about what comes into your company and how they deduct it from your sales and all that. So we're thinking of, since it's not fully, trackable by FIRS in that regard. So is it necessary you include the VAT anymore since you are not registered and you will not remit it?
Well, in this case, since the intermediary is an individual, I see no reason why she should be charging VAT on it.
It's based on she supply granite and sharp sand. So
I
by
think
maybe
the company, this is just my own view of it. The company she is acting on behalf as a middleman, that company should be the one to remit that VAT on your behalf.
No, not like she's acting. She's not working for the company. But I'm saying she's not the one producing the goods. I'm just trying to explain. It's just
Yeah,
like
I
normal
know.
roadside
I
person
get it.
buying.
Yes, I get it. She's just
So
he's buying it from another company.
yes, in the past they've come for audit and they'll be like, we are buying granite. Why are we not paying VAT on it and stuff like? So we just told her, okay, be including the VAT element into it. So just for tax purposes, anytime they want to audit us, you can always show them our invoices and all that.
Okay, so let me give a best solution. Just to recommend.
Right.
What I would advise is that middle man or middle woman, you pay the person VAT, inclusive of the amount. So as the person is now supposed to, that VAT you are paying the person, that person ought to pay that VAT to that company. No. Since she cannot, you said she does not have, she's just an individual, she does not have any, she cannot, she should pay it to that company she's buying the VAT to, and now use your own details as what's it called? As what they should use to remit it on your behalf.
Yeah, the beneficiary.
Yes, so that you can get the credit. I think this is the best way to solve this issue.
Right. So there has to be like a company that is fully registered where she's buying all those materials from.
Yeah.
Right. All right, I think we'll try that out. Thank you so much.
All right, thank you for that. The next person, Mr. Ime, can you go ahead, please? Ask your question.
Thank you for the wonderful lecture this evening. Okay, my question concerns this part of the thing. As at the time I wanted to
Everybody,
remit
VAT today. I was even thinking before you know for series.
as at the time I wanted to remit VAT to for a company. Some suppliers did not have I did not have their TIN number. So in a place of beneficiary TIN number, I put 0. And then I now remitted those VAT. Now they are now coming, disturbing us for payment and all those stuff. Like they are not seeing it on their own dashboard, of which the invoices they gave, there's no TIN number to trace. They did not put TIN number. And now when I went through my concluded assessment, and then I noticed that it was not posted against them because there was no TIN number. And I now imputed TIN number. So when I now imputed the TIN number, it's all not showing TIN number must be in number or all the stuff. But exactly is what the TIN number I updated is their own TIN number. I don't know I don't know if you can help me out on such. Thank you.
Okay. I mean, there's no magic that can happen. If you don't put their TIN number, they cannot get the credits. They will not see it on their portal. That is why it's important that you use your beneficiary's TIN whenever you're making your filing. And like I said during the practical, that if you don't have the company's TIN, you can use the CAC portal alongside the TIN verification portal to get the company's TIN. So if, for example, now you can, let me try and see if I can just quickly run through that for you. Can you give me the company's, you know the company's name? Hello?
Shanghai Technology.
Wait, let me share my screen so that you just tell me. So now I want to show you to how you can use your AC portal and TIN verification portal to get this. Can you see my screen? So what's the company name again?
Yes, I can. Shanghai Technology.
Let me spell it.
SHONGAI.
Technology. Right? So this is the company, right?
Yes.
It's located as Lagos, Abeokuta, something. Songota. Hello?
Yes.
So all I will just do was copy the housing number, right? Then I will now go to my TIN verification portal.
Okay.
So under the TIN verification portal, you have 3 ways to search for TIN. You can use the housing number or the TIN itself or the phone number. But most times this phone number will not work, but the TIN and the housing number will work. So you can use that to get the details of the company. So I'm using housing number here. So housing number of the company is this. So I'll search for it. So this is their TIN. Like you said, you don't have their TIN. So you can see their TIN here now. So this is how to... Can you see my screen?
Yes, I do.
So this is how to get for TIN that you don't have access to. So it will just show how well you know the job. I mean, if the customer, they don't have their TIN themselves, so you can give it to them that, "Sir, this is your TIN in case you can put it on your invoice." So yeah, that's
Okay. Now, since I have remitted and then they were not credited, now
they cannot be credited though.
So for those months now, is there any way can do so that they can be credited, like imputing on those months?
There's nothing you can do, my brother, except maybe if you can go to the tax office to complain, they can be nice to help you on file it. And you know that if they should help you on file it, you now pay for interest and penalty. So, but I mean, you can meet nice people. Shall we have some nice tax FRS guys they are nice, yeah. So they can help you do it from back end. So that's the only solution I can think of.
Okay, thank you.
I think that's all for the question.
One last person, Mr. Kerem. I don't know if it's a Mr. or it's a Miss. The last question for the day. The rest of the questions should be asked on the group and we'll answer there. So, Mr. Kerem, can you please ask your question, please? Okay. It seems that person is not online. So let's take from Mr. Tommy, then we'll end for the evening. Mr. Tommy, can you ask your question quickly?
Hello, sir. Hello?
Hello.
Yes, sir. Well done. So my question quickly, one, on the issue of turnover for turnover base, that's, is it based, the 25 million, is it based on the previous year's turnover or how is that one determined?
So actually, it's based on the previous year. However, you can also use your current year turnover to predict the future. If, for example, now your turnover for 2022 was 21 million naira, that was your annual turnover, it means that you are not liable to charge VAT, right? All you just need to do is to file 0 returns. And it also means that your CIT rate will be 20%. I mean, 0%, sorry. So, but if in 2023, January, the turnover that was made for that January month alone is maybe like 24 million. That means there's an high tendency that there's no how you guys will hit 25 million and above self before December. So with that's a projection already for you. So you can start to charge VAT, maybe let's say from February or March, and begin to file VAT and revenue to the government. So that's just
Thank you very
yeah.
Thank you very much, sir. While I may post the rest on the group for answer, this one maybe I quickly ask this because it may have to do with the platform that you used. I saw that when you are inputting the amount for the additional assets on that under the tangible asset, I
Yes,
saw
sir.
that 540 was selected from a drop down. Is it that there is a specific amount that the value of the asset must be or what? Or you cannot input it?
No. You know, this is my laptop, and the CIT filing is something I've been doing for different companies, and you know the system will just be. So it's the amount that is on your account. That's what you put.
Okay, no problem.
I just used any figure that I saw there. So.
That's clear. Thank you.
Okay, thank you very much for Mr. Adedayo for this wonderful session today and for taking time to actually answer the questions. And thank you everybody that participated in this class. We have received your forms, your emails, and the materials and recorded session will be sent to you before close of business tomorrow. Thank you for being a part of this wonderful tax masterclass. I believe we have learned a lot, and we'll have a 7 days period to ask our questions on the group before the group will be officially closed. So thank you everybody for participating in this tax masterclass, and we look forward to greater things together. So kindly just help us share your feedback. Just take 2 minutes to share your feedback with us on the group. Share your feedback, share your questions. Kindly share your feedback on the group. Thank you very much, everybody, and have a wonderful evening.
Thank you so much, accounting or community team. Thank you for having me.